Let's start with national auction clearance rates.
Yeah, it's still pretty steady, only slightly down from last week, 74.1% from a national perspective, and this time last year was 69.5%, so it's performing better than last year, even though there's less interest. But as Tom will tell you, you only need one person at an auction to buy it, you don't need 10. If you get 2 or 3, that's a real bonus. The best performing capital city was Sydney at 79.9%, so it's still performing very strong. Melbourne came in at 73, and that came in lower than Adelaide, because Adelaide was 74.2%. So Adelaide's pipped Melbourne from a clearance rate perspective. Canberra's still strong, 71.1, and Brisbane, your favourite city, where you come from. Oh, you don't, but you do. 50, but that's where I met you. Yeah. 54.8% for Brisbane, and that's great for Brisbane. Good, strong result.
Let's have a look at homes advertised for sale.
Nothing great. It's a negative 0.37% over this time last week. But for the year to date, so over this time last year, it's actually up 0.39%. So that's a great thing. So basically, more homes are coming on in the true sense, but the ones that they're selling a lot quicker than they were this time last year still, which I find very interesting. New Zealand had a negative 0.6% in stock over this time last year, but they had a massive increase of 8.7% of stock over this time last week. So they've had a few weeks of increase, which is great for their market, because they're coming into a very powerful selling season as well there, and their market's hot.
Residential rent price movements.
Yes. Tom was talking about this earlier. They are still on a negative at the moment until the investors start to thin out. Sydney came in at the worst, actually, at 0.88% over this time last week. Queensland was level. Melbourne was 0.84%. But if I take all of the states together, it was a negative 0.25% drop in rent over this time last week. But since the start of the year, since I've been keeping the stats, it's down now 2.16%. So the rents have dropped 2.16% since the start of the year as an average.
Residential vacancy rates?
Scary, very scary. If you look at the chart, it's been trending upwards significantly. We've been talking about, and I hope people are paying attention, the best performer, again, Sydney, 3.26%. Melbourne is a bit concerning at 5.28%, but Perth came in at a whopping vacancy rate of 7.03%. So something's happening in your place of origin. So on those 3 capital cities, it's 5.19%. in terms of vacancy rate. So that's high, it's getting high. And a lot of people have really got to keep their eye on that at the moment.
Charles, just before we go, I also wanted to get your insights. So no doubt you've been thinking and discussing this, I guess, for some time now. We've seen the banks move to curb investment lending, new, I guess, regulatory measures put in place by APRA. Are you concerned about the impact that this will have on, I guess, buying demand? And, I mean, in particular, for your business as well.
Sure.
What's your read on the state of the market at the
I
moment?
prefer a quieter market, Dan, because the agents have to dedicate more time to a seller, which they don't do in today's market. They list something and it just sells. So the agent's not really doing a lot of work. So I like this kind of market, because the agents can charge a higher fee and deal with fewer people. In other words, the bottom line is actually much better. I'm not concerned in the sense that I think the way the economy is trending at the moment, that interest rates are probably going to sit for a while, and maybe they may even look for a drop again based on what's been happening with mining of recent times. So I think there are still plenty of buyers out there for the stock that's going to come up. I don't think it'll be as exciting, but I think the agents will be working harder to get a sale through. And that's called real estate, not what we've been in. That's
customer service is what Century 21 does.
Well, I'd like to think so.
Charles Tarbey, Chairman, Century 21. Tom Panos at News Corp. Gentlemen, great pleasure to have you on the show. Thanks for joining us.
Thanks very much, Dan.
Time for a quick break, and of course, thank you for your company. Until next week, I'm Dan Murphy.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.